So that's where the model comes into place. Because as of now, we have to enable payment methods one by one, country by country, for all of our merchants. So I go to a very large global retailer and say, okay, let's do now installments in Chile. Let's do M-Pesa in Kenya. So it's one by one. The idea, the whole concept of having stablecoins acceptance in a mainstream merchant is that you can enable over 100 countries all at once with one integration, with a very standardized way.
This is Money Code. It's a show where we decode stablecoins and programmable money. I'm Chuk, Okpalugo, your host and author of Stablecoin Blueprint, and I'm here with my co-host Raj Parekh, head of stablecoins and payments at Monad. Today, we're joined by two guests. First, Chris Harmse, co-founder and chief business officer of BVNK. How are you doing today, Chris?
Great. Good to be back on the show, guys. First
returning guest, hopefully many more. And we're also joined by João Del Valle, the CEO and co-founder of EBANX. How are you doing today?
Very well. Thank you for having me.
Excellent. Before we dive in, a quick note. Money Code is brought to you by Stablecoin Media and powered by BVNK. The views and opinions of the hosts and guests are their own and may not represent their companies, and nothing we discuss today constitutes investment advice or any other form of advice. Okay, let's dive in. So just to give folks a background on just the extent of EBANX, Joao, maybe you can start with the early beginnings, the problems that EBANX was created to solve, and then where you are today.
Absolutely. So EBANX, what we do is to help global companies to expand into emerging markets, merchant acceptance mostly. We started out of Brazil in 2012, just because there's a lot of merchants that were willing by then to expand into Brazil, to accept local cards, installments, boleto, all the payment methods that were available then. And they needed to deploy an entity, all the hassle of building a local operation. So we created a model that was just plug and play from a technology standpoint, but also from an international settlement infrastructure standpoint. So the thing is, the merchant connects to us and they can accept payments just like a domestic entity would, and we will settle them in their original country. That had incredible traction in the beginning, and we saw that there was a broader problem in other countries, so expanded fast in 3 years later into LATAM, in Latin America, other countries. LATAM had traction too, so we stayed for about 8 years just in LATAM, where we were very deep. We were operating in 13 countries, and then we went to Africa and now Asia too, so solving the same problem, helping these global expanders, typically from US, Europe, China, to go into markets like Brazil, Mexico, Nigeria, India, Philippines, and in a very convenient way. So that is a portion of a lot of technology and also international rails for money movement, settlement, remittances.
And just to make that clear, it means that you are at the heart of cross-border flows, both on the collection side, where there are various retail individuals from these various countries who may find it challenging either because of a lack of international card penetration or other financial rails to purchase from US merchants, let's just say Amazon and other e-commerce giants. And so you help those e-commerce firms collect, but then also you're also in the flow for payouts. So helping these international corporations pay out to local countries. Maybe you can talk about the challenges there as well.
Yep. Yeah, that's the mission. So to help them to accept payments in a given country in a very convenient way and get settled. So that's the first portion of the mission. So most of the flows are, okay, pay in, so you accept a payment by credit card or an alternative payment method and get settled. The settlement is important. And then, but a lot of these companies also have payments to be done, to be performed out into the countries, emerging countries, like gig economy workers, sellers, creators economy. And for those payouts, we're also a provider. So a merchant can connect to EBANX and accept payments in Latin America, but also do payouts to Colombia, Brazil, Chile, you name it. So in very efficient way, as much as the local rails allow, which is the infrastructure in emerging markets not always optimal. So that is, in fact, a problem we solve, right? Because if you come in with the mindset of developed markets where things are more standardized and uniform, you come into a fragmented region that has a fragile infrastructure, then the game is very different.
You mentioned all the local rails there. And one thing that is becoming more and more apparent is how stablecoins can help bridge the gap between solving for local rails, international currency, liquidity, and pre-funding. And obviously, you made a partnership with BVNK to help solve some of the problems that you're facing in this business. Maybe you can talk about the genesis of that. Like, how were you thinking through which areas to solve first, and then working with BVNK to start off with the product?
Yeah, I think that there are two very important aspects of stablecoins in businesses like ours. One is, of course, treasury management, international remittance settlement, and the other is like exchanging payments with the users, with the end users, the actual people that need to pay for stuff or to receive money. And I think that's where BVNK comes into place, a partnership like that. Because the one thing that's the payment method part, because a common and average user, the only thing they have access to is a common payment method. In Brazil, that would be a credit card or a PIX transaction, and that's it. So of course, an advanced user will have access to a wallet. They will know how to do a stable coin or a crypto payment, but the normal user won't. So that's what we do. But to expand the reach especially for countries where the regular payment methods are not typically available for international purchases, that's where a partnership like that comes into place. So that's where the model comes into place. Because as of now, we have to enable payment methods one by one, country by country, for all of our merchants. So I go to a very large global retailer and I say, okay, let's do now installments in Chile. Let's do M-Pesa in Kenya. So it's one by one. And the idea, the whole concept of having stablecoins acceptance in a mainstream merchant is that you can enable over 100 countries all at once with one integration, with a very standardized way.
Yeah.
And
that's a key point. Is when we think about stablecoins, I think Joao's spot on. Many PSPs approach stablecoins and go like, look, I've got this APM stack that I've built over 12 years. There's 200 alternative payment methods, but that was difficult and painful to go do. I had to go to every market, get the local method, add it to my APIs, make sure all of that settles, make sure all those collection work. Step in stablecoins, you can bucket it under that APM moniker if you want to, but as Joao was saying, it's an always-on global 100 market APM basically, that you get to add, and I think that's the power that we're starting to see as stablecoins start to get to scale. As Joao said, you needed that critical mass of users who had that wallet, who wanted to spend, but you also needed the PSPs and the payment companies like EBANX to add stablecoins as a payment method, as another APM that gets you this global coverage for a global merchant. So I think it's a super exciting time for stablecoins being added to payment stacks.
And I guess, Joao, I'm also just curious, like, how did you discover stablecoins? I mean, you guys have built a business really focused on, solving pain points for your merchants, your customers, your end users. How did you guys discover, stablecoins and realize like, hey, this is actually like a key missing part that, you guys can expand on with BVNK?
Yeah, of course, we're very close to market and especially global market and cross-border. That's mostly our DNA from Latin America to Asia. So And it's interesting because it changed a lot, right? Like 3 years ago, it was CBDC, and we were not allowed by many of our banks and regulators to touch stablecoins. Not all, they didn't say it, but in meetings they would say, "Oh, guys, if you can stay away, it would be better for your flows, and it can be more smooth for you." And then 2 years later, well, it's stabilized, it's regulated, and so on, and it's everywhere. So yeah, we're very familiar. But then the end user part was something that it was not natural. It's something that we needed to, okay, what are we going to do this? But the user base is very small. The mainstream user is not there yet. Why would we do it? But then a way to think about it is that it's a good way to experiment, although the user base is small. If you multiply the number of merchants we have, plus the number of countries that we can enable, like the audiences that we can touch on that, there's a big chance that a number of these audiences will get traction and will start doing payments with stable coins, and we can get a seed from there. And with that, we can eventually feed a virtual cycle where we can also increase the number of users that are more familiar with that, and so on. So from me, I see that it's nascent, it's too early, but it may grow very fast, and it would be nice if we are in the front back of that race.
Yes, we've spoken, and I think when we last had Chris on the show, of the various different ways that payment firms can start experimenting with stablecoins. And, you know, in your position, there's both the pay in, the merchant acceptance, the pay out potential, and then there's internal treasury. Many of those things are, you know, fairly complex, but pay-ins, I think, like you mentioned, is a great way to experiment, as you can unlock multiple countries all in one go. And as you say, it's a bit of a chicken and the egg, where stablecoin volume is nascent because there aren't that many places to accept it, but because there aren't that many places to accept it, there aren't many users who are willing to use it. And so you kind of have to start on one, and with your reach, you can kind of start to kickstart that flywheel. And Chris, I'm sure you've seen other patterns like that in other areas of customers that you're speaking to.
Yeah, for sure. And I think what's important is like pay-ins and and payouts. So if you take about kind of like some of the use cases we've seen evolve over the last over 2024. I mean, if you go 2 years ago, 2024, we saw a lot of kind of account funding, withdrawal, B2B payment, kind of accounts payable, accounts receivable use cases, very much treasury management. We started seeing the early kind of signs of stablecoin payroll and that sort of thing. But come into 2025, we're seeing a lot more interest around stablecoin checkout, creator payouts, marketplace payouts. So now you're doing both sides again. And then increasingly actually is actually embedded digital dollar wallets. So this is giving global remittance app users a wallet so they could store digital dollars. So I think these all go hand in hand to drive payment volume. So the more people around the world that can easily access a stablecoin wallet through their normal remittance app that they use, the more they're going to be able to go to the EBANX checkout and pay with stablecoins out there. So I think you needed all of this ecosystem to work together. More wallets in market, more PSPs accepting stablecoins at checkout, more payouts landing in wallets so that can then be recycled into the ecosystem. So it really has been a breakout year across all three of those. And we're looking, we hit about kind of 30 billion in TPV this year, which has accelerated significantly. And we're expecting that momentum to carry into 26. And with partnerships like EBANX, I think we're on the way to do that, and it's going to be quite exciting across the payments landscape.
Yeah, the use case is there, right? The use case is there. I was in the US a couple of months ago with a Mexican friend, and then he paid my bill, and I'm Brazilian. I didn't have any way to pay him back. We didn't have cash. So it took us a few minutes to realize, we had the wallet, so let's do it in stable coins, just to pay back like $20 of a bill. So the use case is there. Is about getting traction to it on the P2P side, but also on the merchant side, which tends to be slow, but when it catches fire, it's fast.
And maybe one thing that I wanted to touch on as well is that you talked about expansion, and you guys, spent a lot of time in LATAM, and now you guys have added, more countries also. What's been like the general like expansion story for you guys? Like, how does it work to add new countries for eBanks? And what are you expecting for international expansion for the future for you guys broadly?
So expansion for us is quite natural, and we follow merchant demand and kind of how much attractive the market is. So there's kind of a scorecard for that. But as we operate with large merchants that are present typically in tens of countries, they appreciate the service of EBANX. So let's say that they're working with us in 5 or 10 countries in LATAM. So they appreciate the service, the technology, the account management, the relationship, the compliance, integrity, and so on. And when we say that by the way, I'm launching Philippines and other few countries in Southeast Asia next year. Are you guys interested, and so on? They say, yeah, we're using a partner there. It's suboptimal. Technology is not there. It's not stable. Or I'm somewhat happy, but I would like to have redundancy. So we do all these interviews, a lot of discovery with the merchants. We pick the countries where we want to expand to. Then there's a project phase from 6 to 9 months, including technology and so on. And we go there and do it. So by the time we're ready, we usually have a few merchants lined up to pilot and start ramping up volume. So that's the typical story for expansion. So and it's interesting, of course, with AI now, engineering and productivity has gotten like absolutely incredibly fast. So the bottleneck is usually regulations and partnerships. So if I can speed those interactions up, that would be fantastic. But that's typically the case because we don't want to be a thin layer just connected to a partner. We really want to go as deep as possible, directly to the payment method, and solving and making the kind of the infrastructure very, very solid. So that's kind of the story of how we build it. And and I think the story of expansion, we want to be the final stop for payments in emerging markets, high growth markets, complex markets, things that are not the typical US and Europe. So we're here for complexity and international transactions, remittances, payment methods. That's our day to day.
Would love to talk about that complexity a bit more. I think what's interesting is that both BVNK and EBANX globally expanding in different ways and owning different parts of the rails. And there are many other PSPs and maybe stablecoin companies and just businesses in general who see the promise of stablecoins of being able to go global very quickly and then need to think about expansion. And as you say, AI is making it easier to do the tech side of things. But what other bottlenecks are there? One that comes to mind is liquidity. When you go into a new country, you're trying to do collections, you have to figure out how do you plug into FX, how do you maintain the right spreads, what sizes you can do. Maybe you can talk through how you handle that.
Yes. That is definitely the main point, one of the main points. Because when we go into a country, there are a few aspects of it that we need to solve it. Okay, the payment method, the partnership, and the liquidity. And that needs to be done in a compliant, standardized way, efficient, and so on. So payment method, partnership is something that we can solve. We're mostly in control. But liquidity, having regulations in mind, that's usually the bottleneck if we want to make it scalable. So that is where stablecoins, I think it's starting to help us in that journey because it's a common language. So it's not something that you're going to come into, I don't know, Nigeria or Mexico and people are not going to know about it. They know the mechanism, they know the concept. Okay, is this allowed here? How do I do it? Which regulation do I need to follow? Who can I partner with? Can I borrow something? How can I use a license? So it's much clearer now that common terminology and common language and structures. And it's incredible how things are happening in parallel in different countries, like the virtual asset service providers. That regulation is coming up in every country, from Hong Kong to Nigeria to Brazil, mostly at the same year. So it's that common terminology and common infrastructure is, I think it's going to help us much more in the future to expand.
What about you, Chris? How does BVNK think about support for new corridors and countries and so on?
Yeah, I think we've always been, our business is providing stablecoin infrastructure to payments infrastructure to large global enterprises, PSPs, fintechs, and that sort of thing. And in our flow, there's always the termination is either a stablecoin on either side of the flow. It's either they're collecting through our stablecoin checkout and auto converting and getting settled in dollars or one of the fiat currencies we support. And then on a payout, it starts generally in the developed markets, some big marketplace doing creative payouts or around the world, but it starts in dollars, comes in, and then it gets sent out to 85 markets around the world in stablecoins. So I think you pick up that benefit. And obviously, with the rise of stablecoin market cap almost approaching 300 billion, even if you tease out the specific payment-related flow, Visa does a good job of this. I think it's probably like the main data point we're looking at now, and like what is payment volume. It's a couple of $1 trillion there, I think approaching 7 or something like that. So liquidity is there to kind of do these kind of global payment flows. But I think what's important is to bring local on and off ramps into the fold. So we provide a lot of infrastructure for local payment companies, local FX houses to get into the stablecoin game, bring their local FX liquidity, connect it to that big stablecoin money flow. And now you're able to move in and out in these local markets as well. So that's quite important. We very much see ourselves as playing the role to connect all of these guys into that kind of global stablecoin flow with the right infrastructure. And then they've got their own FX liquidity in those local markets that then easily plugs into kind of the global stablecoin money flow. And that's proved quite successful, in terms of getting more people, using stablecoins and that sort of thing. Because it always starts with kind of, okay, how do I actually accept these things? Where do I store them? Where do I send them? And then you get into, okay, how do I convert them to get them in and out of local currency?
Yeah, the on and off ramps are such a key part. That last mile ends up being critical, and I think there's a role for people to play in this kind of open financial network. There's the role of like, okay, I'm going to nail liquidity in this particular corridor, and then just have incredible uptime, great reliability, and connect to all the major players. And then depending on the particular region, maybe an EBANX wants to actually own the rail all the way to the end because of the impact that it has on your service and on your customer service. And so I think it's going to be really interesting to see how that plays out between specialization and connectivity versus owning the rails end to end. I don't know, Joao, if you have any, you can anticipate how the market will play out.
I think companies need to specialize. Absolutely. So I don't see us like touching low-level rails so soon. So we want to rely on a partner for that. Because the thing is, local rails in countries are getting very specialized and very efficient. So when you look at Brazil Pix or Brevis coming up in Colombia, UPI and so on, those are very efficient and they're just going to get better, and all countries are going to get their own. Then people have this, then it's going to be all unified, but nobody says how. So local rails are great, but the interconnectivity is still a question mark. And of course, stablecoins plays a great role there. But you need scale, you need specialization. If you want to deploy it globally, connect it to different rails. So the flavor of the big winners there, I'm not sure, because there are still many roles in that connectivity. But I think someone like BVNK that, you're going to invest in infrastructure for connectivity between different liquidity pools, markets, big merchants, and so on. I think that's a great mission.
I think one thing that's really exciting about what you just mentioned there is that there like it's like almost like you're creating a payment network between domestic, RTP or domestic schemes there. And I think sometimes you can look at it as like you're going into a country, you're adding a local payment method, but as you guys have added so many now, and now creating the interconnectivity, it's actually building like a really powerful like network effect story that I think that comes from it. And I think, I guess I'm also curious, Chris, as well, but it seems like, BVNK is like also helping with this acceleration of, connecting all these domestic schemes, leveraging stable coins also and starting to build like a global payment network also, which is really, really hard to do, but is now possible to do like within, months and, days versus, many, many years also.
Yeah, I think Joao said it exactly right earlier. I see it exactly the same way. Is all these domestic payment schemes are innovating at different paces, but they're all getting really, really good. 5 years ago, a couple of these RTPs, you had faster payments in the UK, had been around for like 10, 12, 13 years. I'm in Cape Town right now. We still don't have instant payments in South Africa. They're trying to do it, but they're not yet there. Look at the rise of Pix in Brazil. So you had all of these local payment or domestic payment schemes innovating, RTPs coming out in the US now. But when you try to get the interconnectivity, Swift and the correspondent banking network was the only game in town. And, we've seen kind of the friction that's created over the last 15, 20 years. So step in a blockchain and you've kind of got this infrastructure that can connect all of them together. And then exactly to that point, if there's enough nodes on the network into these local RTPs and you're using an open, public, permissionless blockchain to connect them all together, and there's liquidity, and there's users, and there's use cases, and there's merchants, and there's PSPs, that looks, a lot like a network. But I think the beauty of it is it's an open network. It's not a closed system running on someone's, behind closed doors. These are open systems that you can come and interact with. So I think that's really the change. It's getting a bit complicated now because there's a new chain popping up every other day. So we'll see where all of these kind of settle, similar with stablecoins. But, look, I think you probably have explosion of them and then kind of settles with a couple of main ones and probably a couple of main stable coins that kind of, because you don't want to create a refragmentation of the liquidity again, because you want it to be in the network quite concentrated so you can do and actually reach the kind of scale that traditional FX markets reach in terms of the trillions of turnover per day.
Yeah. It's interesting. A couple of weeks ago, Visa announced that they will be supporting stablecoin settlement for US banks. And there's a very clear use case there, given the role that Visa plays facilitating payments in between card issuers and card acquirers. But it sets at least one kind of major US constituent banks to be receiving stablecoins directly. And so I can imagine over time, we talked about the kind of chicken and egg flywheel for consumers paying stablecoins to merchants. But then there's also, PSPs settling with merchants in stablecoins as more and more of them have stablecoin wallets. It's a faster way than wires. I think FedNow and RTP rails in the US, they work if both you and the recipient are both using them at banks that support both send and receive, which surprisingly is not as widespread as we'd hope. But there is increasingly domestic, like US domestic use cases for stablecoins, but we're still super early. But I think it sounds like this will all be merchant driven. If the merchants start to say, hey, you know what, wires are slow, they're not reconciled easily, can you actually settle with me in USDC? Then it sounds like both you Chris and Joao will start to consider that as another aspect of the service offering.
Yeah, I was going to say it's an important point, the Visa announcement with of banks, sponsor banks now finally settling Visa in stablecoins. Because if you think about how card, you hit it exactly right. It's issuer, Visa, the network in the middle, and then merchant acquirer like an EBANX, and then merchant effectively on a card payment. But outside of the US, an EMI can be that issuer, and they can settle and be a principal member of Visa. In the US, you have to be a sponsor bank. So banks were the gatekeepers of stablecoin settlement, basically actually going mainstream in the US. And that's why the Visa announcement is actually quite a big deal, is because Lead Bank and Cross River Bank have said, hey, actually as banks and principal members of Visa in the US, under the way the regs work, we are now going to start settling Visa in stablecoins, which now brings it online. And that means Visa is receiving more stablecoin settlements. That means they can bring more merchants merchant acquirers into the settlement, into the pilot on the other side, and you can start getting more of this use case more prevalent. Obviously, us as BVNK, we've been doing a lot of PSP merchant settlements for the last couple of years, speeding that up when that moves cross border. But I think it's important to move more of the card settlement infrastructure, because as Joao said earlier, it's important to separate the two. You process the payment, then you settle the merchant. Moving more of that settlement on chain, which is kind of the expansion of that Visa pilot, is quite important to get more stablecoins into the system again, and just more people having more wallets, more merchants, more banks, more participants, more liquidity.
Yeah, and there's a good example recently in Brazil was announced. The main stock market here is called B3 in São Paulo, and they just announced that they're going to issue their own stablecoin. Is Brazil Real pegged, but it's an incredible, because the amount of money movement and underwriting in these stock markets is gigantic. So, and having a stablecoin along with the tokenization infrastructure, I'm sure that's going to be a very important initiative for a market like that, because then they can underwrite contracts, check risks, and so on, and really take a little bit of advantage of this kind of interchange of stable coins in country, because that you talk a lot about stable coins, US peg at cross border, but when you with that with CBDCs like now going down and getting much less attraction, some initiatives have to replace those instruments with other stuff. And stable coins is great. And for an initiative like this, of course, we would not use US dollars, US dollar stable coins, but a Brazilian stable coin is perfect for this. So, and eventually, if B3, as a huge issuer in country, they own other businesses which move also huge parts of money, if they're able to make that stablecoin kind of overflow their own ecosystem, then we may have a nice wave of adoption. I don't know. There are a few other initiatives on Brazilian Real pegged stablecoins, but also always traction is an issue, and I think the main interest is still like USDC and USD pegged stablecoins.
Yeah, it'd be fun to, I think, unpack that further, because I mean, in other markets also that EBANX is in, there's new local stablecoins that are also going live as well. Like, I'm curious, like how you would consider just, either taking a leadership position in evaluating new non-USD stablecoins versus, USDC and the other currencies that we obviously have live today. Like, what would be some of the drivers for you all? Is it, you've mentioned demand, but sometimes you can also seed and be a leader in some capacity as well. And like, what would be some of the decision criteria that you guys would think through as well?
I think the one main point is that international settlements are getting faster. So like few years ago, it used to be Swift. It was acceptable to do settlements in 2 days, 3 days, or people were not paying too much attention. Now there is a possibility to do it mostly real time. The demand for that, or how much your client is demanding for that, no, I want my money now, is increasing. They don't want it right now, but they know that's available, and I'm sure that in very little time there will be more demand for real-time settlement. And with that, the liquidity ends will need to be automated. So with that, there might be an opportunity to connect this interconnection, this cross-border interconnection of stablecoins to locally pegged stablecoins. Then that would be fantastic, fully programmable, fully automated. That's kind of I don't think that's a super long-term vision. So if you have someone that has traction, that has liquidity in market, and you can like bring in USDC and convert that, or global stable coin and convert that into a local stable coin, and in and out, and do that in very fast ways, and make sure that your settlement is fully automated, I think that would be fantastic. That's one of the ideas what we use.
Yeah. I think where you touched on earlier about we've obviously had a keen eye on non-USD stablecoins over the years, kind of looking at which ones are going to get some traction. A lot of the time, if there's a domestic payment system, we spoke about earlier, all the domestic payment systems are innovating at different paces, but some of them are getting very good and many of them are instant. Then do you really need a domestic stablecoin to play the same role in payments, basically? Where USD shines is because it links them together. But I think what Joao said is really important is like, as stocks move on chains, you get that wave of tokenization and you move assets on chain. Assets always have a cash leg to settle. If you're buying an asset, you need to settle in cash. And if the asset is sitting on chain, but the cash leg is not sitting on chain, that's when you can get this mismatch and you get these settlement delays. But now if you've got a stock in Brazil and a Brazilian stablecoin and they're both sitting on chain, you now get an instant settlement of an asset transaction. And I think that probably seeds a lot of liquidity in domestic stablecoins. And once you have a lot of liquidity in domestic stablecoins, you can start using them in global cross-border flows where it can be a USDC against a Brazilian real stablecoin. And then that's where we ultimately get to on-chain FX, where most of FX moves on-chain. But I think, in these domestic guys, I don't think payments is going to be the groundswell that drives it just yet because of these domestic payment systems. But when you're bringing assets on-chain that need to settle against the cash leg, and the cash leg now moves on-chain with a local currency stablecoin, that can bring the liquidity that ultimately can start moving things on-chain. And I'm excited to see that. So I'm like, we're not in the tokenization of stocks game, but I think it's a really interesting thing to watch. Yeah, it's a really interesting thing to watch to see how the liquidity landscape pans out as the US does more of this, and as domestic markets like Brazil do more of it, where they've got large stock markets and large potential to get domestic stablecoin issued.
I think that's a great point. It's such a path-dependent outcome. I think we can all feel that FX should happen on-chain. It has all the right properties. These individual currencies that can be, issued into these bearer assets that are all commodities and therefore operating under different regulation. It's already kind of a wild west in the global FX market. Seems perfect for a permissionless blockchain open finance layer. But as you mentioned, it's just hard to get that liquidity and hard to seed it. And, I think we've spoken on this show about lots of different ways. I think investing and tokenized stocks and other investment products is one key way to bring the cash leg. There's also lending, ability to do on-chain lending or collateral-backed lending in your own local currency requires a local currency stablecoin. And so the list goes on of these individual, specific use cases that drive that chicken and egg flywheel and to a point where then some market maker, a liquidity provider who's supporting on-chain stocks then says, actually, I can still make money on-chain FX. And, I'm kind of trying to stitch multiple things together here, but that could be a potential way that it happens. And just for both of you, you are both in global businesses and you serve clients who have different use cases, but you each have internal treasury operations. Maybe Joao, will start with you. How might dollar stablecoins, but then also non-US dollar stablecoins potentially impact your treasury operations?
Definitely, I think that's a clear use for markets that, there are multiple markets where that's already mostly mainstream, so that you can get money in and out of a country using stable coins and other digital assets. So and that is something that we look at when we're evaluating liquidity options or remittance options in a country. We need to be very attentive to regulations, but in many countries that's becoming pacified topic. So it's just do it. The example of Brazil recently. So now it's very clear. So yeah, of course the regulation, the licenses are still coming out, but you're going to be a VASP, and you're going to be able to do on and off ramp on the assets here. So when someone is going to do an FX transaction, you can do it through a bank or through a stablecoin rail. The reporting and compliance and KYC and AML controls are going to be exactly the same. Just the money channel is going to be different. It can be a bank, a direct bank doing a wire transfer or something, or a stablecoin transfer. Does the country allow for netting? Yes or no? That is a part of the money movement mechanism, and then there's a compliance layer on top of that, which is going to be the same. I think countries are going to move mostly towards that, and that innovation, from what we see, is that it comes from emerging markets, because we are the countries that are more used to having currency controls. By default, your transaction is monitored. It's not that they do it on a sample basis on 1 in a million. No, you can expect that your transaction is going to be monitored. So I think across most of the countries, that's how we see regulation shaping up. So the money movement rail is going to favor the mechanism that's going to be more efficient in terms of cost and speed. So I don't know how Chris may think about that, but I think I see the innovation coming a lot from emerging markets.
And before we move on to Chris, maybe if you can help just quantify what that means for your business. Is it in terms of millions of dollars of pre-funding saved? Is it, X percent basis point reduction in transfers? Like, how should we think about the benefit?
We look at the benefit from a speed standpoint. So it's just faster. We can do like same day settlement instead of like 2 days or unexpected cost. There's a cost, speed, and predictability. Because still in traditional rails, there's lack of predictability. You don't know when the wire will arrive, or if they're going to deduct the $30 in the receiving end or here, even though we've been doing that for decades. It's still like every new wire channel you're going to configure, it's still a hassle. So, and with digital transfers, we expect it to be more predictable and faster. There is a cost component to be evaluated. I think that's still something for us to work on. But definitely speed and predictability is those are attributes that we have expectations on.
No, 100%. I think we think about it the same way. I mean, we built on stablecoins, so stablecoins are prevalent all over the treasury, and the way we rebalance treasury is all on stablecoins. But I think exactly that, like you just, as Joao says, that predictability of knowing the money's going to get there exactly on time in the amount that you sent. And having kind of live payment statuses on chain. Think about like all the payment status. If you're paying, build these, now you can just watch them happen on the blockchain, basically. So when you look at all of that and you put the ingredients together, again, it like comes back to, it is just fundamentally better payments infrastructure using a blockchain to do payments. And you can go all the way back to the Bitcoin white paper where he says, Satoshi said, peer-to-peer electronic cash. It was a payment system that he put into the world, basically. We can do all these other cool things on top of blockchains, but ultimately it was a payment system. So, when you get into the nuts and bolts of it, it is just better. It's just a better technology to do payments, and you get all these benefits on the back of that. Cost remains to be seen in every corridor, as Joao said, but I think for the most part, you take speed and predictability over a few basis points.
Brilliant. I think there's just maybe one more aspect that I would like to bring it up, which is kind of why we have this compliance and KYC aspects of it, and that's very interesting. And we're seeing in countries because when you have more control, more traceability, in the long term, it's going to be better for the good guys. So I think as of now, we still see some kind of alternative gray area flows showing up, and that may happen forever, but we see that the possibility of that reducing a lot, and these FX rail being even more mainstream, more controlled, more averse to money laundering and other stuff. So that's what we're seeing in Brazil with the local rails, because of course the bad guys take advantage of the speed and how simple it is to do a transfer. But later on, I think the authorities catch up, and the traceability of PIX in this case is great. And I think for foreign transfers with stable coins or digital means on the blockchain is also going to help the world eventually to move to a better place where there will be less terrorist financing and money laundering that's international. So see that with good eyes too.
How do you see that playing with privacy? I think there are a bunch of use cases where, or it's often said that privacy is the next unlock for stablecoin payments, especially for consumer or for trading or other use cases. You can think of many where you wouldn't necessarily want your business activity or personal activity to be traceable or visible on chain. Now, as both of you think about how you're utilizing stablecoins and the transparency that it offers, where do you see privacy playing a role, and what kind of flows does it unlock versus block?
Yeah, I think it's super important. I mean, exactly on that KYC layer, by putting more, you can see a lot more things, particulars on the payment, and there's amazing tools like Chainalysis and Elliptic that allow you to, blockchain intelligence platforms to get way deeper and check every single hop in terms of where the money's been, and hopefully that leads to way more information and less terrorist financing and all of this thing. And that's already happening. It's actually way more difficult to money laundering these sorts of things in the blockchain because you get to see every hop and every wallet the payment ever interacted with. But then to your point, Chuk, things come in around privacy and let's say you're doing stablecoin payroll. Are you going to be able to figure out whose salary is getting paid into what wallet and that sort of thing? I think it's still pretty difficult because it's not really, blockchains are not that human readable just yet. But I mean, there are some things where you can just throw it in and figure it out. So I think some privacy features being built in a chain level is quite important. I know multiple different blockchains are working on things like that, but we'll have to see where they get to on those.
Yeah, I think in the end you have to sign up for something or accept a kind of an agreement of what you're joining. So I think there will be scopes where if you're working on this scope, you have to kind of accept that there will be some concessions on the privacy side, because if you want to be in a safe environment, eventually you have to sign up for some rules. I think that's how we see, especially in local rails in different countries. You have some thresholds that are reported, and they just have to be clear and regulated and governed. I think that is something that the citizen should be able to expect. So I hope that's the way it unfolds.
Yeah, there's certainly a trade-off. And I think, folks who are part of a mechanism of payments across a network of known parties or parties that you want everyone to be above board, you're happy to opt into a particular system of governance, even if that is in an open chain. That's all we have time for. This has been great. Good to get feedback from different perspectives. Just as we're wrapping up here, where can folks, we'll start with you, Chris, where can folks learn more about you and BVNK?
You can find me on LinkedIn just at Chris Harmse and BVNK on bvnk.com.
And you, Joao?
Same for us. Quite active on LinkedIn, posting about EBANX, cross-border payments. EBANX always there too. So happy to meet there.
Great. And Raj?
You can find me on X at rparekh, and then LinkedIn Raj Parekh, and mana.xyz.
And for me, it's stablecoinblueprint.com, X Chuk_XYZ, and LinkedIn Chuk Okpalugo. Thank you both so much for joining the show.
It's been a pleasure.
Thanks, guys.
This was awesome. Thanks, guys.
Thanks so much for listening to Money Code. There was so much to take away from today's conversation. I learned a lot, and I hope you did too.
If you enjoyed this episode, do us a favor, share it with someone you know, or give us a 5-star rating on Apple, Spotify, or wherever you get your podcast from. Until next time.